Colleagues, imagine for a moment that you're in your car, you are driving home from an OSU women's Beaver basketball game. You are talking with your family about the best plays of the game and the fantastic season they are having, when suddenly an unexpected flash of light occurs before you and everything changes. Your car is spinning, your life flashes in front of you, and when the car comes to a stop, you still haven't processed the fact that you've been hit. You hear the sound of the ambulances, they come. You and your loved ones are loaded into the ambulances and you're headed to the hospital. One of the things that flashes through your mind is that you're grateful that you have faithfully paid your car insurance premiums. You never expected that you would need your personal injury protection, your uninsured, underinsured motorist coverage, or that your own financial future would depend on the quality of the insurance product that you had purchased. Fortunately, because you paid your premiums faithfully, you don't have to worry about this right now. And you know that you can focus your energy and thoughts on your own health and recovery and that of your family. You know that you don't have to worry about finances right now because you trust that you are going to get what you paid for. Unfortunately, crashes like this happen all too often in Oregon. And also, unfortunately, all too often, injured motorists find out too late that their insurance product, under current law, will not protect them from substantial financial losses. Let's assume for a moment that the crash that I just described, the injured motorist accumulated $150,000 in damages. That driver had paid an extra premium for uninsured motorist coverage worth $50,000, a $50,000 limit. The at-fault driver's coverage limits were also $50,000. The injured motorist assumes that she will have $100,000 in coverage to apply to her damages, the total coverage limits of her plan and the at-fault driver's plan. However, under current law, that isn't the way that it works. The injured driver will only have $50,000 of their damages covered because our current law does not mandate what is known as stacking. Quite simply, stacking means that the injured driver is able to recover total damages up to, but not exceeding, the combined limits of both policies. This is what Oregon consumers believe that they are buying, and it is in fact the way that it works in a majority of states. Our constituents are finding out too late that this is not the way it currently works in Oregon. Senate Bill 411 will fix this problem by allowing consumers to recover their losses from the combined limits of both policies. Particularly in the most catastrophic of crashes, this type of protection can mean the difference between financial stability and fiscal ruin. The financial hardship currently experienced by Oregon consumers stings even more because they are surprised to learn that they aren't covered, and they will face massive out-of-pocket expenses despite their faithful payment of premiums for an insurance product that they honestly expected would cover them in a situation like this. Senate Bill 411 also makes two other changes to auto insurance law. First, it ensures that the injured driver is able to recover total damages from the at-fault driver's personal injury protection before their own insurance company is reimbursed for their expenses that were paid immediately after the crash. In addition, Senate Bill 411 extends the period of time that an injured motorist can claim damages up to their total limits from 1 year to 2 years. This does not increase the dollar value of the insurance plan. It simply means that, for instance, if physical therapy is needed for 18 months, the injured motorist can be reimbursed for those costs for the entire therapy regime, assuming it is within the coverage limits, rather than the current practice of being limited to making those claims for only 1 year. Some have suggested that these changes will make insurance premiums too expensive, or that it will reduce consumer options. DCBS informed us that based on rate filings they reviewed, the average premium could possibly increase about $1 a month or $12 a year or 0.3 of a penny a day. The majority of states already have these provisions in statute, but there isn't a clear correlation between the statute and the rates. Some of these states have higher premiums than Oregon does, and some of these states have lower premiums than Oregon does. In each of the states with the stacking provisions in force, consumers continue to have many choices. There isn't a lack of insurance products available to them, which means that if they spend just 15 minutes on the phone, they too can still save up to 15% on car insurance. Oregon drivers will be able to continue doing that as well. As legislators, we all spend a lot of time commuting. When I get in my car to go back and forth to the Capitol every day, I know and I expect that I am protected by the auto insurance that I have purchased. Across the state, our constituents expect that they and their children will also be protected if the worst happens. Senate Bill 411 simply ensures that that is true. Passing this legislation will bring us in line with the majority of states in our country and ensure that our constituents, Oregon consumers, get what they believe they are paying for when they write those premiums every 6 months. Colleagues, Senate Bill 411 is important to our constituents, it's important to Oregon consumers, and I urge your aye vote. Thank you, Madam President.